Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the major EURUSD 10% On Thursday, the EURUSD pair returned to the 100% corrective level at 1574 and bounced off it for the second time in a row. This resulted in a reversal in favor of the euro and the beginning of a new upward movement toward the 1.1645. A rebound from this level would favor the US dollar, and a third return to 1.1574. A consolidation above 1645 would increase the likelihood of continued growth toward the 1.1712, the 127 Fibonacci level. The wave pattern on the hourly chart remains simple and clear. The last completed downward wave did not break below the low of the previous one, and the most recent upward wave did not exceed the previous peak. Thus, the trend remains bullish for now, despite a prolonged correction. The lack of real progress in US trade negotiations, the low probability of trade agreements with most countries, and the introduction of new tariffs continue to cast a bleak out for the bears, even though they have been on the offensive in the recent weeks. Over the past several weeks, the US dollar has been actively strengthening, although the news backdrop has not always supported this movement. On the 4-hour chart, the pair has consolidated below 1.1680 level and below the ascending trend channel. This suggests that the bullish trend is beginning to shift to bearish based on the technical picture. Despite the US dollar rising for the third consecutive week, its fundamental foundation remains weak. The current dollar growth still appears to be a typical corrective pullback. The underlying problems with the US currency have not gone away. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. The British pound has decided to hold off on entering the narrower consolidation range of 1.3233-3369, instead turning upward this moment into the broader range of 3369-3635. This move was supported by increased risk appetite in the stock and commodity markets. S&P 500 up 0.54%, WTI up 1.76%. The expected price growth is likely to be moderate, as it's unfolding below the balance line. It's a red line on the chart, and the Marlin oscillator will require at least 3 days, assuming the price continues to rise, to move into the positive territory. The 3-wave day stagnation at the 1.3369 does not support a quick return to bearish sentiment, so a sideways movement within the established range is likely over the next 1-2 weeks, more precisely until the July 30 Federal Reserve meeting. On the 4-hour chart, Marlin has entered positive territory. The price will likely attempt to reach the balance indicator line It's a red line in the chart, and the MACD line at 1.3508. However, it's unlikely to break through this line today.
That's all for today. See you online soon.